Hey everyone, welcome back to Accounting Basics. Whether you're a small business owner, freelancer, or just trying to get better at managing your finances, today's topic is a must-watch. Did you know that one of the most common reasons small businesses fail isn't lack of sales, it's bad accounting? And the worst part? Most of these failures could have been avoided with a few simple changes. Stick around, because I'm about to share the top 5 accounting mistakes that cost people time, money, and sometimes their whole business. You don't want to be one of them. First up, and this one is a classic, mixing personal and business finances. This is like using the same drawer for kitchen utensils and car tools. Messy, confusing, and totally unproductive. If you're using one bank account for everything, you're making tax time harder and increasing the risk of errors, or even audits. What to do instead is open a dedicated business bank account and get a separate credit card. This small step alone will make your bookkeeping, tax deductions, and financial planning 10 times easier. Coming in at number 2, poor record keeping. You don't need to be a spreadsheet wizard, but you do need to keep track of your income and your expenses. When records are incomplete or outdated, you can't make accurate financial decisions. And when tax season hits, good luck trying to find that receipt from 9 months ago. Quick tip: use accounting software like QuickBooks, Xero, or even Wave if you're on a budget. And don't forget to back everything up digitally. The IRS accepts digital receipts. Mistake number 3: DIY accounting when it's over your head. Listen, I get it. You're trying to save money, but trying to do all of your own accounting without the right knowledge, well, that can actually cost you more. If you don't understand tax codes, reporting requirements, or how to categorize expenses correctly, you might be underpaying or even worse, overpaying, and both can be a problem. What do you do instead? At least consult with a certified accountant during tax season or when setting up your books. Think of this as an investment, not a cost. Mistake number 4. This one flies under the radar, but it's super important. Not reconciling your bank statements. Reconciling means comparing your accounting records to your actual bank statements to make sure that everything matches. If you're not doing this regularly, errors can pile up, and you might not notice fraud or duplicate charges. Pro tip right here: set a reminder to reconcile your accounts monthly. Most accounting software can even automate parts of it. And finally, mistake number 5. The mistake that sinks more businesses than anything else: ignoring cash flow. You might be making sales, but if you don't have cash on hand to pay your bills, you're in trouble. Revenue is not the same as profit, and certainly not the same as positive cash flow. What do you do instead? Create a cash flow forecast. Track your receivables, and don't let customers delay payments forever. Stay on top of what's coming in and what's going out. Okay, let's recap the top 5 accounting mistakes to avoid. Number 1, mixing your personal and business finances. Number 2, poor record keeping. Number 3, DIY accounting gone wrong. Number 4, not reconciling your bank statements. And number 5, ignoring cash flow. Even just fixing one of these can massively improve your financial stability and save you stress, time, and money. If this helped you, give it a thumbs up and hit that subscribe button. I've got more accounting content on the way. And if you've made one of these mistakes before, no judgment. Just drop a comment below and let me know which one caught you off guard. Because believe me, you're not alone. Thanks for watching. I'll see you in the next one.